Welcome back to Opening Bell. Stocks been somewhat mixed right now. The S&P and Dow are slightly higher. We're getting you the very latest from the floor here on the New York Stock Exchange. Matt Wittmer is with us, portfolio manager, Allspring LT Large Core ETF. Thank you for being with us.
Yeah,
so some of your thoughts on the recent market action we've been seeing, Matt?
Yeah, it's. I think it's doing what it should be doing right now. I think this is earnings season, and we're hearing from companies, and they're giving us some, I think, good news. And I think that's reflected in what the stocks are doing.
All right, so that you think that things are heading higher versus lower? You feel like, is that the? I mean, even if there's a pullback or volatility, your big picture path of least resistance is higher. So when we talk about AI, you know, everybody loves talking about AI and large cap tech. Do you like those names?
I do. I think this is an interesting time in the market, especially for active managers. I think there's a lot of focus on the AI infrastructure trade right now, which is rightfully so. There's a lot of investment moving that direction. But I think there's also some pockets of the market that are being ignored a little bit. And I think that shows up in the valuations. Look at the Mag 7 and the Grade 8. Those names are trading above kind of the market average right now, and I think there's some pockets where there's opportunities that are trading below that, and I think that's what we're starting to see. We're taking a holistic approach to the AI trade, and so we're starting to think it's important to start broadening out that AI trade.
So there are ways to go and grow with AI, but not necessarily the Mag 7.
Yep.
So let's go through some of the names that you do like. You had Suncor, Total. Tell me about some of these energy-related names.
Yeah, I think energy is an interesting space right now. I think it's the supply-demand imbalance right now. There's a bit of an air pocket going on, and I think if you look longer term, energy is going to be an important part of this AI build out. I think we're going to need every ounce of energy that's out there, and I think these guys are being ignored from that perspective. Demand's going to outstrip supply here in the coming years just because of the underinvestment that's taking place in the ground, and so I think names like Suncor and Total are going to benefit from that longer term.
And then another AI theme would be in industrials, right? How so?
Yeah, the name we like there that's a little off the beaten path is something that's related to water. I think water is going to end up playing an important role too down the road as the data centers kind of get built out from a cooling perspective. Water in general, the aging infrastructure going on here in the United States, I think is going to have to be accounted for. Xylem is a name that we like a lot. That's going to be it's the largest play in that space. They've got a lot of dry powder to do a lot of M&A activity. It's a very fragmented market from that perspective. And from an AI perspective, about 5 million gallons of water gets used on an average data center every day. And so Xylem's in a great position to help those infrastructure builds out take advantage of that.
And before I get to the financial sector, I mean, just talk about the strategy of the ETF. The ETF ALRG, I know you have somewhat of a barbell approach.
Yep.
Tell us about the Allspring long-term large core ETF.
Yeah, I think we take a differentiated approach. We look out 5 years into the future, so we try to ignore that short-term noise and really focus on the signals that are out there. And so we want to own high-quality companies that are inefficiently priced relative to the long-term growth rates. And that's what we're doing with the ETF. And to your point, we take a very holistic or barbell approach. We want to make sure we have exposure to that AI infrastructure trade, but we also want to make sure we're uncovering some hidden gems that are out there that have great balance sheets, great management teams, durable franchises, and some sort of moat that we can take advantage over the long term.
I mean, because some of the large positions are mega cap tech.
Yep.
And you're fine with that, right?
Very, very much so. Yeah, but we want to take that holistic approach when we're looking at that AI trade. So one of the areas that we're starting to spend more time on is software. We think that's an area that has been kind of left behind while all this infrastructure build is going out.
Right.
So we like Salesforce, Microsoft, and Adobe right now.
Oh, that's interesting. I hadn't seen that. So let me write down Salesforce and Adobe and Microsoft, because that's a good one when it comes to the software. And then also you have financials on the mind. Tell me about that.
Yeah, I think banks are in a very interesting position right now. We kind of look at it from the 3 C's approach: cost, credit, and capital. And banks across the board are in a very good position from a credit perspective. They've done a good job. I think we heard from them this last week or so with some of the noise coming around with some of the private credit information. I think management's did a very good job kind of explaining their position from a credit perspective, and I think their risk management approach has been very solid. From a capital perspective, I don't think they've ever been stronger, so there's opportunities to be able to pay that back to shareholders. And then from a cost perspective, I think they've got their finger on the pulse and are doing a good job from an expense-related standpoint.
So in the big picture, I mean, when you start to hear like the White House, for example, today, the Trump administration, Scott Bessent was talking about considering some stakes in quantum computing. Then there was also, Scott Bessent was talking about the curbs on some of the U.S. software going abroad, right, to China. So there are going to be headlines, but your strategy is more long-term?
It is, yeah. We want to see how these companies are positioned 5 years from now, not over the next 3 to 6 months. And I think that gives us a competitive advantage.
Okay, great to see you, Matt. Thank you. Matt Wittmer, Portfolio Manager, Allspring LT Large Core ETF. Thank you for being with us.